SoftBank has invested about $3.9 billion into one of the 25 world's largest tech giants, including Amazon, Tesla, Netflix, and Alphabet. The Japanese firm owned worth $1.4 billion stocks of Amazon. Its biggest investment till date is $475 million in Alphabet, $248.6 million in Adobe, and $189 million in Netflix. SoftBank is on another investment strategy, and this time the conglomerate targets America's biggest tech establishments rather than chasing high-valued startups in a bid to appease investors with immediate returns. It held stakes in some of the so-called FAANG securities. FAANG belongs to a group of 5 key tech companies: Facebook, Amazon, Apple, Netflix, and Google. SoftBank Group has invested about $3.9 billion in one of the 25 world's largest technology companies, including Amazon, Tesla, Netflix, Alphabet, and other technology stocks. SoftBank founder Masayoshi Son aims to expand the company's investment activities from private startups to publicly traded equities at a time the biggest technology stocks are near record highs. The Japanese conglomerate confirmed in a filing to the US Securities and Exchange Commission dated August 17th that its stake in Tesla was worth $122.9 million as of June 30th. The Japanese firm is targeting investments of more than $10 billion in public stocks, which is a part of a broader bet on transformative technologies. Moreover, the filing also shows a $183 million stake in Microsoft, $111.5 million in PayPal holdings, and $108.8 million in Zoom Video Communications, while SoftBank invested in Facebook and Apple, in which the companies were not listed among the latest disclosure of US listed holdings. Over recent years, SoftBank has been a promoter of innovative startups driven by the $100 billion Vision Fund. After WeWork and several other high-profile flameouts, that strategy faltered. But SoftBank's dealings with public stocks have scored some wins over the past 3 years. It is also worth mentioning that the list is not limited, and there are several other Chinese names including streaming giants Bilibili and iQIYI, as well as Singapore's Sea Limited, which are one of the world's best performers over the past 18 months. Adding to the list, the latest filing showed SoftBank has taken a position in Nvidia worth $180.9 million and gained profit from investments in Charter Communications in early 2018 and in US chip designer Nvidia Corp. The development of a public equity fund was partly driven by the long-standing urge of numerous executives at SoftBank to pursue asset management. The asset management team is led by Senior Vice President Akshay Naheta in Abu Dhabi, and therefore the group has been actively amassing multi-billion-dollar stakes in American big tech firms during the last few months. Following its $3.3 billion takeover of alternative asset manager Fortress Investment Group, SoftBank also considered buying a stake in Swiss Re, the world's second biggest reinsurer. The firm is in the process of offloading 4.5 trillion yen in legacy assets, including stock in Alibaba Group, T-Mobile and its domestic telecom unit, and the capital raised from it will asset the management arm. Also, SoftBank's investments in FAANG stocks are buoyed by a tech rally in the market where Uber Technologies rebounded 11% last quarter after tumbling in the first and is now trading at close to $33, SoftBank paid in early 2018. In contrast, less successful was a complicated investment in the now famous German payments company Wirecard, in which SoftBank is looking to put distance between itself due to its ongoing scandal involving missing money and cooked books. SoftBank and its Vision Fund have had to write down stakes in 20 other firms, including Uber, which was placed on the stock market earlier this year after reduction in valuation, whereas acting as a catalyst The performance gives a strong boost to the Vision Fund portfolio, which is heavily weighted towards ride-hailing companies including Didi Chuxing in China, Grab in Southeast Asia, and Ola in India.